Welcome to Markets Now. I'm Michelle Rook with Bryan Doherty, Total Farm Marketing. Well, the grain trade kind of eased today, as well as milk futures, while we saw the rest of the livestock complex to the plus side. And Brian, the easing that we saw in the grains today, how much of that was either profit taking because we needed a correction, or we just ran up into some chart resistance?
Well, you have several things that happen on a day like today. So you run up into some chart resistance, right? And as soon as the market starts to tip over traders, we talk about profit taking. That could come in one of two forms. One is they just exit. Two is they run sell stops up under the market. So if the market begins to tip over, it begins to trigger these sell stops, which triggers selling. But keep in mind, farmer selling has picked up as of late. This is the push that farmers have been looking for. You've got a strong technical picture in the wheat market straight up here earlier this week. Lots of uncertainty trying to determine what kind of freeze damage may have occurred with the Russian crop. And is that going to stay in the drier side over there? We got the Kansas Wheat Tour getting underway. What are they going to find compared to what maybe the market expects? So, a lot of new news, a lot of new activity, a lot of good underlying demand in the marketplace. But there's still ample inventories, and that has me personally concerned that the market could run out of steam kind of quick. So I'm in the camp that if you've got inventory, make sure you're trickling this out and rewarding this rally.
Brian, was there also some concern about these China tariffs, maybe some retaliation or anything like that?
I think that concern is perceptive in nature. We didn't really see anything in the egg sector that would have us concerned yet. There was a lot of talk and hope that there might be some sort of action against imported cooking oils from China. That didn't wasn't the case. So there may be some apprehension there, and maybe that's enough right now without any additional supportive news to keep prices moving.
Yeah. The other news that hit the market, Brazil crop estimates came out, and instead of going down, they actually went up for corn and beans, didn't they?
Well, they did. I think the market's getting a little better handle as well on some of the flood damage in South America. If you might remember when prices spiked about a week and a half ago, there was talk of 4 to 5 million metric tons lost. Then it kind of reverted back down to, well, maybe a million metric tons. Now it seems like the market's settling on about 3 million metric tons. They're at risk. But today's CONAB numbers pushed the acreage up a little bit. So the net of it is still positive for price, but it's not enough to keep the upward steam. That has to come from somewhere else. Not sure where that is other than turning back to US northern hemisphere weather. The 6 to 10 day forecast looks kind of wet. So, with only half the beans or half corn in that range, a little lower on beans planted, we need some good weather to kind of finish this crop out and planting season out. That's kind of to me the big wild card right now.
Yeah, no doubt. Do you think the corn market held together maybe a little bit better just because of some of these planting delays that we are seeing, or not?
Yes, I do. There are some areas, it's really strange. You can talk to in the same county some farmers that are done planting and some farmers that haven't started. It just depends where these rains were, or farmers were patient in March. Remember, it was kind of warm, dry, kind of waiting, be patient before you get into the field too quick. With some, that's a little bit of regret now, but it's spotty all over the Midwest. And so we're talking to farmers who haven't turned a wheel. We're talking to farmers who are done. There's a whole lot that are somewhere in the middle and they're scrambling looking for fields that are ready to go. So it's not ideal. It's mid-May. You can't really push a pencil to any yield loss at this point. I know statistically the odds are that your crop starts to lose some yield after about the 10th, depending where you are in the Midwest. But from a big picture perspective, it's that longer range forecast. This is going to get kind of interesting here if these rain expectations actually materialize. And now you're talking for some the 25th, end of maybe the end of May before they might really get a shot at getting their crop in the ground and whether they want to really tackle that hard.
Yeah. And speaking of weather and crop concerns globally was what really started this rally first in the wheat market. And we took a little correction today, or a breather, but that story is not over, is it?
By no stretch of the imagination is over. Remember, wheat's got a lot of what we call air above it. That means we came down from higher prices, and now it's starting to get the energy and enthusiasm. Now, does it have to go higher? No, but it is weather driven, and you've got different pockets in the world. In particular, I'm going to continue to point to net drying conditions in that Black Sea region. We talked about this earlier in winter. Some things called hot spots where expectations where things could be drier. That's one of the regions that expect to be drier, but all of a sudden you have some freeze damage this last week adding to the upside potential there. You've got continuous stories about exporting countries that are low on inventory. You look at India, 15-year low inventories. They've have historically recently been exporters. They're going to be an importer of wheat. So the wheat market has been the leader. And then you got the Southwestern United States, how that winter wheat crop got off to a pretty good start, but seemed to be, in problematic areas due to lack of rain. And so you've got a lot of different spots in the wheat complex flooding in parts of the Brazil where they want to get at planting wheat, can't get to it. So different things providing support. The question is, at the current price levels that we've rallied to, is this enough to make the next leg higher? I think there has to be probably one more something, another shoe to drop or something to really exasperate and push this higher. So where I'm going with this is, if you're a wheat producer, don't assume it has to go higher here. We're at pretty good levels to get some sales in place, both anything in storage and new crop.
So with what you just said, Brian, does that infer that wheat, maybe corn and soybeans, we've had the funds cover a large percentage of their short position? Are they done covering that, do you think?
The funds rarely go long wheat, and so they're getting back closer to maybe a zero level after this week, we think. And so for them to kind of shift in the high gear and go net long, I think they're going to have to see some real problems or perspective problems elsewhere, in the sense that these could be problematic areas. I want to, I'm taking a shot at this, but I want to believe that the wheat market is probably running out of gas. It's up against some long-term major upward, what we call resistance on the chart. That is areas that were support last summer and fall when prices went through. They never looked back. So now we're back up against these areas.
Right. What about corn and beans? Do you think that the funds will keep covering their shorts there and go flat, or what's the next move here?
I think the next move is based on your weather, because right now
Okay.
it's very easy to cover shorts or go long, predicated on the idea that maybe not all these acres get in, or they get in very late, and you add this uncertainty to the planting season. So I think that jury is out for right now. History would tell you don't bet on planting delays and wet weather and those type of things, but history isn't 100% accurate either. Look at 2019. So there's some things there weather-wise that I think dominate for right now. The problem with corn really exasperating itself upward, especially with old crop, is there's still an army of farmers out there with a lot of inventory that they need to move, and they've been selling into this rally. We feel they've been relatively aggressive, and they're pushing that extra inventory that they've been holding for some time. Make sure and reward themselves, and it only makes sense.
Right. Cattle market back to the plus side, back above, I think, 100-day moving averages in both the June and the August live cattle, but essentially we're kind of range bound yet. Do you think we'll be able to keep going higher here, especially as box beef has now started to make a move?
Yeah, we can go higher, but I think we have a limitation. What the market told us here fall is we saw the futures, test that 200 area in a level that looked like, hey, where does this go to? And we found that demand sort of fell off. And the problem I have with it, an inflationary environment right now, and then talk today that the Fed's not looking to probably do anything soon as far as lowering rates, is that you've got the sticky inflation where the consumer, I just don't think, can chase beef prices higher. They'll buy, and those are going to buy, but you're not going to develop a new market of buyers. And that's the concern I have with getting overly optimistic on beef prices. I can from the supply side. Think about it. Our nation grows every year. We have the smallest herd in 50 years. That you have to think in those contexts, but you've got to also think about, well, who can pay that? And I don't think you're adding a segment into society to pay for higher beef prices. So the substitutes will come more into play for them, and beef is the odd one out in that environment.
Yeah. So milk corrected today, but since the last time I talked to you in early April, we have rallied like $5 off the lows in the class three price. Today hitting a contract high and reversing. Are you concerned about that? Is that a top?
That's a pretty big signal today so far. We need to see how it plays out. But when you look at where markets, for instance, just talked about corn. Corn posted a very ominous, big bullish key reversal at the bottom of the charts at the end of February. This is a bearish key reversal. big at the top of the chart. That usually is a sign that the market shifted an upward gear, exasperated itself, and then the sellers come in and begin to sell, or the hedgers come in and sell. It doesn't have to mean there's a top, but at certain price levels, common sense has to kick in. And is the market going to continue to find buyers again, find demand, or perceived demand, or some sort of closet demand at these higher prices? I would probably perceive not. What was interesting though is, we talked for many months on how this market was probably setting itself up on a decreasing herd size, decreasing milk cows, and yet the market just kind of plugged along and then it fell apart. But as soon as those buyers aligned themselves and started actually buying, then it was kind of the cap was off of the lid, or the lid was off, and they just scrambled to get inventory. And we saw that in the cheese market, the way the cheese market led this entire rally was just aggressive, strong end user buying in the cheese complex. Now, whether or not this had something to do with the avian flu and whether we can move cattle around, calves around, and whatnot, I think the bigger picture perspective is we talked about these cows that are being extended for breeding purposes for beef calves. There's more money in that, and we're lacking heifers, and the herd's going to get tighter, and the market reflected that this last couple of weeks.
Yeah. Thanks for your analysis. As always, Bryan Doherty with Total Farm Marketing. That's Markets Now.